The ICF Training and Technical Assistance Team is honored to welcome you to this California Housing and Community Development training session offered through the Emergency Solutions Grant Coronavirus Relief Consulting and Staffing Services contract. I'm Chris Pitcher from ICF. I'll be hosting today's session. Today's session is part of our community workshop and is entitled Coffee and Calculators Using HUD's Income Eligibility Calculator. It's my privilege today to introduce our two presenters, Chris Andrews and Erica Snyder. I think, Chris, I'll hand it to you.
Great, thank you so much, Chris. Good morning, everybody. Thank you for logging in first thing or early with us. As Chris said, I'm Chris Andrews, part of the TA team with the ICF contract, and I'm joined by Erica Snyder. Erica, I'll let you introduce yourself.
Good morning, everyone. Erica Snyder. I'm part of the team too, and I'm located down in Carlsbad, California, just outside San Diego.
Great. So we are going to do something a little bit different than what we've done in most workshops. Today, we're going to be kind of 100% walking through the HUD tool. So I am going to go ahead and share my screen. And Erica, just confirming you're seeing the HUD Exchange?
Yes, we can see it.
Great. And so what we want to do today in this session, as Chris said, our objective is walking through, introducing you all to the income calculator tool. Erica and I were doing a training just a few weeks ago. We had a chance to do a really quick preview of the tool and talking about eligibility. And a number of you said, gosh, we'd love to spend a little bit more time kind of seeing exactly how it works. And I think one of the best ways to learn how it works and to kind of see how it works is for you to dive in right there with us. So I want, if you already have a HUD Exchange account, please go ahead, log in if you can, if you would like to. I'm going to give folks just a moment to do that while I'm talking here. And then as we're going through kind of step-by-step of how you use Income Calculator, you'll be able to go through step-by-step with us. When you're done, we'll show you how to delete that sample file. So you don't have to keep it. You can keep it. You can keep it as a test. And you can just go back and reference, okay, we did this here, we did that there. We also have a number of links that we want to be sharing with you. We'll be popping those in the chat kind of as we talk through them. And then, I think there are also a lot of questions about kind of doing an income certification, either as part of your initial evaluation for homeless prevention or as part of your reevaluation. And after the session, we will make sure to send out, there's a lot of great guidance on the HUD Exchange about how to go through an income calculation, kind of above and beyond the calculator, what are the regs, what are the requirements of it, and we will make sure to circulate that with everybody in the training. So with that, I'm going to just walk you all through how to get to the calculator. So to begin, we are here in the HUD Exchange. I have already logged in. And so I'm going to go ahead and click on My HUD Exchange. And this will open up kind of my account information, trainings I've been in. I can update my user information, submit an AAQ, submit a TA request, and I can also open up my HUD application. So one of which is the CPD Income Calculator. That is going to bring us to the CPD Income Calculator. And a couple of things that I want to highlight. One, HUD has put together a great user manual that walks you through step-by-step of how to use the income eligibility calculator. Erica's going to pop that into the chat, the link for that manual, but it walks you through everything from creating an account, if you all don't have a HUD Exchange account, walking you through how to do that, to how to go through screen-by-screen, step-by-step of using the calculator. You'll see you also can open up the income limits for each of the HUD CPD programs that are included within the calculator. I'm going to scroll down a little bit and have an option here to start calculating an income. I'm going to click on go to my dashboard. And you will see you can either kind of click on, this is a calculation that I created earlier today. So you can open one up if you've already started something and continue working on it. Or you can begin a new calculation. These are within ESG. If I wanted to do one in a different program, I could just click the drop-down menu and go ahead and select the program. So I'm going to begin with a new calculation to start. And Erica, I think if there are questions coming in, we're going to kind of pause frequently just so that we're answering questions as they come kind of in each field or each screen. So as those questions come up, please raise them. And with that, before we jump in, we'll pause here if there are any kind of initial questions that you want to go over.
There are no questions in the chat as of right now.
Great. Okay. So clicking on creating a new calculation, we are able to then indicate what ESG component are we providing assistance to the household that needs the income calculation. Is it a rapid rehousing reevaluation, or is it an HP initial intake, initial evaluation, or is it an HP reevaluation? All right, I'm going to go ahead. I'm going to begin with homeless prevention initial intake and click continue. Next up is entering the beneficiary ID, right? I think we've talked in other sessions a lot about PII and making sure that PII is being protected and not being put out in documents where it doesn't need to be put out. So using a beneficiary ID for the household. It could be an HMIS ID, it could be a local organizational ID that you use, kind of any ID that you want to use to distinguish and document that household. And you can go ahead and put in kind of 1 to 6 custom characters. If you all are doing it here today and you just want to know it's a test case, just going to go ahead and type 111-111 and then indicate how many members are in the household. Go ahead and select 4. The one thing to note, a lot of the data, a lot of the content, if you enter something and you realize, oh, I need to change that, you can edit it. This field cannot be edited. So once you go ahead and set this screen up, you're not able to go back and edit that. That is the beneficiary ID. You'd need to start a new calculation. So this is a field where you want to make sure you get everything correct. Go ahead, click on continue. And here it's asking us to identify a member ID for each member of the household, right? So we indicated there were 4 members of the household. So I'm going to go ahead, I'm going to click and just 1-1, 1-2, 1-3. Again, these can be kind of any identifier that you use. And then you just have a couple of questions to fill out for each. So which member is the head of the household? We'll go ahead and just select 1-1. And then is any member a co-head of the household? And we'll say that's 1-2. Anyone under age 18? So we've got 1 person under 18. And then is there a full-time student who's age 18 and over? And we'll go ahead and select yes. And again, click continue. And now you will be selecting your location. And this will determine what the income limits are for the metro area, for the geographical area that you're in. So we'll go to California, either be selecting a county or an MSA. Go ahead and select LA. And then right now we can either do 30 or 50% because, as you all know, with ESG CV, we had a little bit of flexibility in being able to do the 50% income limit for HP. I'm going to go ahead and select 30%. Here it gives me a printout of just what the income limit is for 2022 for a household of 4 people. 30%, the income limit is $35,750. And what's really important is it's giving you a date, right? So as of October 3rd, 2022, the day that I'm doing this is the income limit. You get an option to print this page. I always like to print this page saying, here's the income limit that I'm operating in, and as I'm entering everything in. Go ahead and click continue. And now you begin entering your income. The first field that comes up, I think is a little bit confusing for a lot of folks, is asking you what the passbook rate is. The ESG program uses the Part 5 income certification, income definition. And that includes evaluating and determining, are there any assets that a household may have? And then what is the imputed income of that asset? That might be a savings account, it might be a checking account, it might be a pension, kind of anything that someone is receiving that they may be getting a payout for. And you would be entering what the passbook rate is. We're going to kind of send out a handful of links right here. So I think first, this is from the National Center for Housing Management, is a really good kind of description of how do you think about what HUD's kind of imputed interest rate is. How do you use that for calculating kind of income from an asset? And kind of walks through the different rules of doing that. So we're going to drop this in the chat. And you see kind of generally for public and Indian housing, you are setting kind of a passbook rating, kind of a little bit above, a little bit below, within 75 basis points of the savings national rate set at kind of the federal level. And so those are posted here. We'll kind of drop that link in. I think the rate right now is just under 0.2. Yep, so 0.17. So the passbook rate range that you could be setting is anywhere between 0 and just under 1%, kind of been falling in line with that PIH guidance. And what that means is that any interest kind of earned on that asset would be calculated kind of using this passbook rate that you are setting here in the calculator. So for ease, we'll just say it's 1%. But you have, which is a little bit above, I think, what that total threshold would be, but you have flexibility in determining what that is. And I think that will be a lot clearer kind of as you all go through the guidance that we're popping in the chat right now. So you set that passbook rate. That's the passbook rate that you generally set on an annual basis. And then every year you go ahead and update it. I always recommend for folks of going ahead and updating that rate kind of when the income limits are changing year over year. So in the spring, saying, okay, we'll go ahead and look at what the FY22 passbook rate was and go ahead and update it for FY23. And then just making a note and keeping that in your program file. And to be clear, whether you're using the income calculator or you're doing kind of your income verification on your own, you do need to be using kind of that asset calculation and using a passbook rate. Go ahead and click continue. And now we begin to enter income. So it begins with assets. Assets only come into play if the household has $5,000 or more. And there is a link that Erica will send out, kind of showing the kind of asset inclusions and asset exclusions kind of within a Part 5 income certification, as well as we're going to getting into the nuts and bolts, a pretty expansive technical guide for determining how to go through and determine your Part 5 income and do your income calculation and answering a lot of the programmatic questions that you might have. But we'll go ahead and we will just do kind of some level of assets, kind of, savings, in XXX bank, current cash value, let's just say $3,000. Actual income, right now we might just say there's no actual income reported from those assets, and click Save. And now we can begin entering the anticipated annual income for household member 1-1. And here it walks us through exactly what to do. So we are looking at what is the expected income over the next 12 months. So we're inputting, any wages, salaries, expected raises, overtime, bonus, that individual is expecting to receive in the next 12 months. So here we can just put in, description, hourly job at, XXX location or business, anticipated wages, we'll say they're hourly, say they're making $16 an hour, working 24 hours per week, 50 weeks of the year, and they expect to get $100 in overtime or bonus pay, and maybe doesn't expect kind of any raise or cost of living increase. So we'll go ahead and click Save. And we'll scroll back down. You'll see here it's kind of calculated out. Hourly job is $19,300. They may not be getting any benefits or pension, no other public assistance, and no other income. And so we will be done with individual 1-1. We'll go on to beneficiary member 1-2. And here maybe this individual has no assets, but we'll go ahead and we will enter employment. And again, maybe this is a kind of annual, salary job at XXX, just to show the difference. And annual pay of $15,000. No overtime or bonus pay, but they expect to get a raise. And we're going to indicate when they expect to get that. So maybe raises happen in January 1. So we had originally a salary of $15,000. We'll say I'm going to raise to $17,000. And it starts on January 1. Right, so we go back in, double check. It's only 15,000, increase in 17,000. Go ahead and click Save. And here it gives us a annualized salary of 16,510. So why is that not 17,000? We're looking at what that expected income is over the next 12 months beginning today. So that raise, we're only thinking about it for 9 months, right? Because October, November, and December, that individual is making $15,000. Check everything else, make sure it looks correct. We can move on to individual number 3. And here, right, the presets to this, noting that this member is a minor below the age of 18. Therefore, their employment income is set to 0. during the calculation of annual gross income. And now we'll go to our full-time student. Here, right, we get another note. Remember, it's a full-time student and not the head of the household. Therefore, if their income is over 480, then the total amount of their employment income is capped at 480 for the calculation of annual gross income. So let's just put an example there. Let's say they have an hourly job, $12 an hour, 2 days a week for the better part of the year, no overtime, no expected raises, but we'll go ahead and click save. Oh, hourly job. Here, right, we're seeing an amount of 7,600, but the grand total is capped at 480. We've now entered kind of our data in for all 4 members of the household. Go ahead and click calculate. Here's where kind of all the math is done for us. So here it begins, kind of a total report out of assets, right? There is only one savings account of $3,000. That $3,000 is not above $5,000, so there's no imputed income from that asset, right? That's considered zero, no actual income. Anticipated annual income, right? We have 2 salaries, a total annual income of $36,290, right? We've got the 19,000, the 16,000, and the 480. So showing, that they are above the income limit, right? That they would not be within the 30% income limit. You would save this. You can, I would recommend printing this page, or you can export it to a PDF, and it would show kind of all of your calculations that you've done. And you can then save that in the file. Now, just to show you what it'll look like kind of on the other side, I'm just going to go back and make a quick edit here just to bring the person below. The threshold. So I just dropped the hours from 24 to 16. We'll go ahead and click save. Right now, that number went down to right around 13,000. And I'm going to go ahead, I'm going to click calculate again. Nothing else changed for everybody else. And here now we're seeing a total annual income of $29,890.99. And that is indicating that, based on the information submitted, the household is below the income limit. So we're going to go back. We're going to do this together one more time. I think it's helpful to do it a couple times in a row. But a few things now that we've walked through it once that I want to note. When you're doing an income calculation, you are still responsible for collecting the information, the data that you need to make this determination. That might be pay stubs, if a documentation of bank accounts, whatever it may be. Somebody's a student, documentation that they're a student, and all of that information that you need, you still need to be holding and collecting that data and keeping that in your client file. Here, you're using the calculator instead of you having to create a spreadsheet and doing that math yourself. You're able to kind of just input all of the information that you gather and then put that into the calculator and then just get this printout. And I think the one other point that I really want to emphasize is when we're doing an income calculation, we're looking the next 12 months forward, right? When we calculated that raise, it was calculating that looking at, from today, October 3rd, 2022 to October 2nd, 2023, and making that determination for the next 12 months. So all of your calculations are looking going forward and saying, okay, for the next 12 months, where are folks looking? Erica, I'm going to pause here. Any questions coming in?
Nope, we've got a quiet group drinking their coffee, watching.
Well, hopefully we're keeping you awake. Your coffee's keeping you awake. A few before we go back through and do one more example. Just a couple of the resources that I wanted to highlight for you. This is kind of a very long, right, 140-page guide on determining income and allowances for the home program. It walks through both the Part 5 and other income determination methods. For ESG, we have to use Part 5, but it really walks you through kind of every step of what is included, what's not included, and every piece of information you need. And then here, I find this to be a really helpful cheat sheet, and this is linked in the calculator itself too. But it walks you through what is and is not included in income, and what is and is not included when you're thinking about assets. Again, within the ESG program, we don't see kind of a lot of heavy calculations with assets. We see that more kind of in the other CPD programs. But you do want to know kind of, okay, what is going into an income inclusion and what might be excluded from an income, right? So we saw the example, income from employment of children. If the household, if they're foster parents, kind of the payment for being a foster parent, that is excluded, right? Kind of going down the list. The income of a live-in aid, something that just came up for me recently. I've been doing that calculation and excluding the income of the live-in aid. And then again, if it goes down, being able to talk about what is and is not included if you're calculating assets. And so this is very helpful, both as you're going in the calculator, but also as you're going kind of through the document collection process.
Hey, Chris, we have one question.
Sure.
Is the HUD guideline to calculate the future 12 months or the previous 12 months for eligibility?
Sir, can you repeat that question?
Sure. Is the guideline for HUD to calculate the future 12 months when we're talking about like income assets?
Exactly. Yeah. So looking forward at the future 12 months.
Great.
So you are looking at it from today going forward. So I'm going to save and come back to my dashboard. So I'm going to scroll down, right? And we're going to see here we've got a new beneficiary ID, right? And it'll show you the status if I'm partially through it, that I'm still working on it, or if it's complete, and then the eligibility determination. So you get a quick snapshot here. If you do a calculation, you do it incorrectly, you need to start easier to start over, you can always delete by just clicking the radio button in the delete column and then clicking delete here. We scroll down and we now just have that one entry. So we will go ahead and here we'll do a rapid rehousing reevaluation. Click continue. Again, enter the beneficiary ID. You can do 1 to 12 household members. The calculator goes up to 12. If you have more than 12 household members, you will need to do that calculation kind of on your own. So let's just say it's a household of 3. Click continue. And again, kind of entering your beneficiary ID. Do 1 1 2 2 3 3. And here, right? So we talked about a different calculation of if the member is the head of the household, N is a full-time student. It gets calculated a little bit differently. So we'll come back, select California. We'll go to a different area. We'll go to the Fresno MSA. And again, right, we're doing wrap root housing, so we're within 30%. Here we see for a household of 3, income limit of 21,000. Click continue. So again, do 0.5 here, putting your passbook rate. And just to show you that passbook rate, we will put over $5,000. If I had additional assets, I could keep adding them here. So beneficiary number 11, total employment. Right, so expected to receive in the next 12 months, following up on that question. So hourly job. Maybe $14. They're in school full time and they're working 20 hours per week. And maybe expect to get $500 in overtime pay and do not expect to receive a raise. There, so we see a grand total of 15,000. No other benefits or other income. We'll go to the next member. Here we'll just also add maybe a checking account. Say $500. Save, and then hourly wage, $10 an hour, 8 hours per week, about half the year. And no expected raises or other pay. Oops, I forgot a description. Just add here. Okay. And member 33 was a minor below the age of 18. So their income is set to 0, no matter what we have there. Go ahead and click calculate. And so now we will see the asset calculation, right? So we see our income limit. Again, our assets, we have a total of $8,000 in asset. And now our imputed income, right? The passbook rate was 0.5%. So 0.5% of 8,000 is $40. That $40 is imputed income kind of from this. So we're not counting the 8,000, we are just counting that 40. Okay. And so now, right, we see wages and salary, 15 and 2, and no benefits or other assistance or income. And then we see asset income of 40, so total annual income of 17,100, showing that that is kind of below. So we can save and return that. And that is now, edited or kind of saved here in our dashboard. While the status is complete, we can still go in and make edits. Right, so let's say we began, we thought that the income was calculated correctly for both. And we subsequently learned for beneficiary member 22 that they had additional employment. Second job. Hours per week. And be a little bit more. And that they received 500 in overtime pay. Go ahead and click save. So now we see this individual is making 7,400, right? An additional 5,400. Go ahead and click calculate. And now we scroll down, we see that their total annual income has gone up from 17 to 22,500, showing that they are above the income limit for Fresno, for 2022 income limits. We save and return to our dashboard. And now we're seeing it's complete, but that individual is ineligible. So you can always go ahead and update those calculations as you go.
Thanks, Chris. One question popped in the chat. Can you remind folks what a passbook rate is?
Sure. Yeah. So I think one, I want to highlight this document of determining HUD's imputed interest that we sent the link out to. Your passbook rate is essentially what you would be using as a determination of savings if you were to cash out that asset that you have. You liquidated your savings account of $7,500, assuming that on that $7,500, the passbook rate or the interest rate that would be made on that $7,500 is what your imputed income would be. So you're using that passbook rate, a savings rate, I think is an easier way to think of it. I don't know if that answers your question or not. I find this tool, this link being a helpful way to read through it and let it sit in your head. But happy to talk through more examples of that too.
Great. And feel free, if you have more questions on passbook, if you want to use the chat, you're more than welcome to. You can also come off mute if it's hard to type it out and ask verbally if you feel comfortable.
I think, again, just want to, we said this before, but make sure you're printing and saving this in your file. And again, this does not replace collecting the documentation showing what an individual's income is. You are only using the calculator as a calculator, right? It is only that tool.
I have a question, Chris. Is the calculator foolproof, or does it ever have technical issues that you should think about?
It can. I think it, a helpful, knowing what the income limits are, and you can see and say, okay, for Fresno, right? I'm just going to click ahead to our summary here. We have this income limit of, up here, we have this income limit of 2105, and they've exceeded that by $1,000 of 22.5. I think especially right around when income limits are changing from 22 to 23, making sure that you are being very timely in using the calculator, but also checking yourself and using your own logic. If you're looking at someone saying they do not seem like they would be over income based on the wealth and knowledge you have, and the calculator is coming up showing that the household is above, you may want to double check that. You may want to kind of do the back of the envelope calculation yourself. And then in this calculation, you would want to, you may want to go back and do it again on paper, just to document. So it can have issues. HUD does a really good job. HUD knows how many folks use the tool of keeping it current, and when there's a bug or an issue in it, of going ahead and fixing those. But like any tech tool, right, there can be an issue or a bug that comes up. Any other questions that folks have? And again, we'll make, I know we put all the links in the chat. We will make sure to send all the links out as well via email for folks. We know it's a lot of information, but if you do have more questions, can find future times to go back over this or other TA options to help folks out.
Yeah. And I think just one thing I throw into folks, Chris probably mentioned this, but if you're onboarding staff who may just be familiar with like the California words for federal benefits, like CalFresh, it's going to be in this system using the federal, so the SNAP program or Supplemental Nutrition Assistance Program. So if folks are looking in here and they're like, wait, this doesn't qualify, we might just want to make sure we're using the federal and not how we've renamed it here in California.
Great, thank you. Yeah, great point, Erica. Thank you.
I'm not seeing anything else further. Any final questions for Erica or for Chris before we wrap up and end today's session? Feel free to come off mute or put it in the chat or raise your hand. Those are all fine options. Okay. Seeing none, I will go ahead and close this out. Thank you, Chris, and thank Erica. Thank you, Erica, as well, for the session today. And thank you all for attending this California Housing Community Development Community Workshop session offered through the Emergency Solutions Grant Coronavirus Relief Consulting and Staffing Services Contract. Look out for more information on our next community workshop series sessions. 3-question survey will help as this session's end. Please provide your feedback as we do read it. In fact, this session came from feedback from the last session. So if there's something you need more of, or just want to give us feedback, please do. We read it for sure. Enjoy the balance of your Monday. Be well.